Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, January 30th, 2026. S&P 500 currently sitting at 69.28. I'm David Zarling. I'm here with Ian McMillan. Fridays sometimes can change a week.
Fridays stink sometimes.
Yeah, everybody talks about case of the Mondays, but maybe we got a case of the Fridays.
Too bad we didn't have a 3-day weekend.
Oh, wouldn't that be nice? You
know, this would have never happened, right?
Everybody talks about 24-hour trading being the new thing. What if we just...
Oh my gosh, can you imagine?
Yeah,
you're out enjoying brunch with your family, and then your junior silver miners are down 14%.
Could happen. You might start yelling at the kids.
Yeah, in public, in front of everyone.
Waitress might not get a tip.
What's that guy's deal? Oh, he's
24
he might
hours.
be long silver.
24-hour trading.
Yeah, it happens. But
yep.
I mean, everything that was working the best, I guess, certainly getting hit today. I guess they say, when we had that gap down 2 weeks ago on a Monday, they said, or was that this week where they were all about Greenland?
Oh, you're talking on equities?
Yeah.
Yeah, that was on Tuesday, which would have been the first day of the week.
You're right.
January 20th, there was a gap down. But your point is metals and mining, which have been a tremendous leader, definitely having a shot across the bow today on the 30th of January, 2026.
And it's not like this was a scenario where the chart was rolling over.
Mm-hmm.
I mean, very, very strong. You could use the word parabolic, but we've been that way. I mean, we've been that way for a while now.
Anytime you're sitting 140% away from a 200-day, a rising 200-day, probably going to have some. We know trees don't grow to the moon, but there's also no way to. I really wish they rang the bell. And I'm not saying this is a top in silver. You look back to 1978, 1979. You had some intraday daily volatility on that move. But we also know that rocket ships eventually come back to the earth. Trees don't grow to the moon. Is this the shot? Is this when metals and mining cool off for the foreseeable future? Could be. Is this a false breakdown and flush out of the dollar?
Yeah.
Because that range expansion we saw last week to the downside in the dollar, trade-weighted dollar using DXY, Dixie, pretty aggressive. And maybe today we're getting a clue that this was a type of flush, exhausting the sellers of the dollar. And are we going to move higher because we're back above the prior closing lows near 96.50, currently sitting at 96.93? Could be.
Yeah,
Don't know.
A lot of places to hide on a day like today. Could have been long Vietnam. Could have been long Indian small caps, but I wasn't.
And I do find it interesting that we haven't had an 80% upside day since November.
And so we haven't had an 80% upside day, but then, we got bullish percent back up to the high 60s,
which is nice. In advanced decline lines.
No continuations, no thrusty continuations. Maybe that kind of got overlooked because small cap participation was well.
Advanced decline lines
were not too bad.
No.
NYA was good. NASDAQ a little. But the index was also pretty weak. So
mixed bag this week. I think when you look at a combination of, are we going to get a positive January, that January barometer, which we're still positive as of today. So if we closed here, we have a few hours to go. You'd have a positive January barometer, but you mix in that February seasonality is pretty sketchy.
So you brought that up.
corrective
Or here.
behavior in midterm years. And on the one hand, you've got semiconductors holding up well. On the other
So I think
hand, you have some weakness out of discretionary versus staples. One day doesn't make a trend, but you could see a scenario where February is pretty weak.
Yeah. If you were to look back in 30 days, 28 days, I guess.
Not a
Could
leap
see
year.
it.
Not a leap year this year.
Aerospace has been weak for a couple weeks. Actually peaked, 2 Fridays ago. If you're using ITA.
Aerospace and defense.
Emerging markets, been very strong until today.
Well, and one day doesn't make a trend. A lot of these things, even with today, it's not like the damage is complete. You could see emerging markets versus S&P pulling back into its breakout level that took place in mid-January, pulling back and retesting that level. Be perfectly normal. Doesn't make it easy. But when you got things like Microsoft, major weighting in the S&P with a pretty large gap down, I mean, that's a hyper liquid stock trading, 30 million shares, and you have it gapping down on earnings. Not ideal. I mean, 8% gap down on Microsoft on earnings.
Yeah. And it was a double beat.
So it's not about the earnings themselves. It's about the price reaction earnings. And I do part of me wonders if there's a narrative here for software in general.
Brittle.
You brought up before, like Salesforce, CRM, software as a service kind of getting hit. I mean, even
XSW has been pretty weak for a while.
IGV, pretty weak, which is the expanded tech software.
Very weak.
Previous darlings like AppLovin, below important levels at its 200-day, which is rising. I suppose the thing that could be said about the dollar showing a flush is the same thing out of some of these things that we're flushing out the weak hands. Could be. But even Bitcoin, back below 90,000, trying to hold
80, 81.
These lows from November.
Yeah, it was you had the failed breakout there and around a couple weeks ago, 18th, 19th, and straight down from there.
How much stock, or no pun intended, how much weight do you put on sector performance year to date?
I always like to see risk taking.
Okay.
Obviously, you want to see the uncool stuff, the boring stuff, utilities, staples, real estate. I can throw energy in there. Kind of want to see that as underperformers, right? If I had like my ideal market scenario, given, what we've experienced the last 5 to 10 years, I know there's periods where energy and utilities outperform and stocks do fine. And we've covered those ad nauseum on this podcast over the years. But yeah, if you were to say, Ian, create your perfect market environment, you just want to see the cool stuff, tech. Probably want to see financials do well. Not the sexiest, but you probably want to see it as a top performer.
Right. It doesn't have to be the top performer.
It doesn't have to be the top, but
as long as it's participating.
Yeah. Which I don't know what we're going to do with banks, man. I know we talk about banks all the time, but much like Russell, they just never quite seem to keep her going. So where were you going with that? Would you have year-to-date numbers?
Yeah, if you look at year-to-date, so through January, this being the last trading day of January, you have your top performers, energy. Next in line would be materials. Then financials and industrials. Your worst performer year-to-date is financials. And even, tech, XLK, year-to-date.
XLC is probably pretty bad.
Underperforming. So it's one of those things where, like, when you use the study, the practice of technical analysis, and you look at sector rotation and market dynamics, we have a year-to-date scenario where energy and materials are leading, and that tends to be the leadership group near bull market tops, dare I say. And I understand that Friday price behavior, it doesn't dictate a full trend, but I think today is a shot across the bow, not only for metals and mining, but we have 1 month worth of data. You have energy and materials being your leaders, financials negative on the year. Kind of want to see this fix itself quickly.
I hear you. Yeah.
I mean, you even look at ratios like discretionary versus staples. The cap weighted version of that relationship's always kind of hard because it's so tilted towards Tesla and Amazon. But when you look at equal weight, we're definitely haven't recorded a new high in that relationship.
We're not crazy.
No.
Cap weighted also doesn't look that great.
No.
And it's a mess.
So you want to see some of these relationships resolve themselves to the upside pretty quickly here. and well, we're allowed to change our minds. We've been bullish for how long now? And I think the evidence is starting to stack up that maybe things are not all that well. I mean, on the flip side, conductors are definitely still holding up really well.
They are.
One of the best practices you can do is when you have a pretty red tape, just see those things that are holding up well, and semiconductors are holding up well. And that's a good thing. I don't want to get too somber on you, but we're also heading into a February seasonality period for a midterm year. That's not great, right? We're still in the 6-month period of best market performance. That's November through April. But of those 6 months, February in a midterm year, not so great. So can we really be surprised in an environment where energy and materials are the best performers, financials are the worst performers, coming upon a February where we have some type of corrective behavior in February? I don't think we get to be surprised by that at all. I realize that I'm saying this with S&P still positive on the year and only 2%, 1.5% away from the highs. But man, 7,000 seems to be a level on the S&P 500 to try to get through.
Unbreakable.
I mean, we've been here for a couple months, November, December, January, trying to get through 7,000. Maybe there's plenty of people willing to sell here.
Seems to be selling stuff that I own.
You think metals and mining, it's over?
I don't know. It's tough. I think we got to wait and see what this dollar does. This is such a dramatic move for like a 80 bip move in the dollar. We'll see. Could just be people. I don't know.
I love that because no one knows. Neither of us know. Nobody listening knows. The talking heads on financial TV definitely don't know. X doesn't know. But I think it's worth paying attention just to those areas that have shown strength year to date, those that have not. I mean, because financials had been setting up real nice, and for them not to not follow through, it's like anybody, right? That person doesn't follow through. That's a little bit like, wonder what that's about.
I think KRE is a great example of just regional. It's just like, what are you doing? It's just it actually has maybe not the best example. We'll tell that, but it doesn't. What is this up here? Like 69? We'll see. What about the VIX? Is the VIX making a big move?
Yeah, I think that's also fascinating. We've got VIX sitting at above 17 currently. There's a 200-day on the VIX, whether you like to use technical analysis on the VIX or not. Previous times that we've climbed into volatility territory that's in the 20s for the VIX has been a bottoming process. Does it move higher? Don't know, but I do find it interesting that since the end of December, the VIX has been rising, and so has the S&P. So you've had this pent up volatility waiting to happen, and here we are on January 30th with some apparent volatility across the market. I mean, we as of this recording, there's, only like 20% of stocks are up today. I'm not saying it has to be, like you said, somber and like it's over, but there's definitely some things that the market needs to prove. I mean, financials need to get back into positive territory. Whether you like it or not, January 1st is a mile marker in the market. Be nice to see financials regain a positive return.
Boy, JP Morgan's had a rough start to the year.
Right. And that's a bellwether. I mean, JP Morgan's a bellwether stock. And speaking of bellwether, Freeport-McMoRan, copper.
Copper, yeah. Copper's taking it on the chin today.
64 on Freeport-McMoRan, FCX. Had been a brand new all-time high, exceeding the 2008 and 2011 highs. And if we're going to sell back below that, if this turns into some type of shooting star or event where it was a false breakout on Freeport-McMoRan, if you're going to have JP Morgan and Freeport-McMoRan do that. But on the flip side, I mean, you still have things like Caterpillar. I mean, Caterpillar looks pretty good.
So are we going into recession if Caterpillar looks good? I guess we could.
That's a good point. Yeah. How risk off are we if emerging markets broke out and you've got industrials doing well? Probably not all that risk off. That doesn't mean you can't have your standard 10 to 15% equity correction, right? Because the average return for the S&P 500, we're all familiar with this, 8 to 9% per year. It's the least likely outcome, meaning those numbers, 8 or 9%, are an average. They're not, the amount of times that's actually happened is extremely limited. And in between the start of the year and the end of the year and that positive return that you get, that average return, there's typically, on average, a 10% drawdown. Did that start today? Could be.
Let's do it. Let's do it and get it over with.
Get it over with, just like last year. Last year when March and April, decent corrective move for the market and then moved higher. Rip the Band-Aid off. Is that what you're saying?
That would be my choice. But no one's ever asked me. No one's ever surveyed me.
The beatings will continue until the morale improves. Don't mind that. What are you seeing?
I don't know. What are we doing in rates? I guess nothing. Same uptrend since September.
Looks like Jim Harbaugh didn't get the Fed chair job.
It sucks. He's a dove.
Is he?
Yeah. Haven't you ever heard his
Wait, do I have the wrong? I think I got the wrong Harbaugh. Not Jim Harbaugh.
But he does lots of speaking engagements on fiscal policy. He's a very multi-talented man, not just a football coach, an economist.
So supposedly we're supposed to get a new Fed.
Yeah, that's the big hubbub that everyone seems to be in a tizzy over. New Fed chair. I don't know. I never heard of the guy. But people certainly, like everything else, people certainly have their opinions.
That's what people are good at, having opinions. What do you think about small caps?
I mean, if I look at IWM, obviously if we're above 245, 244, it's fine.
Agreed.
Relative chart, finally got the 200-day kind of moving upwards. So that is turned into a tailwind, but definitely not a week of outperformance. And I'd say NASDAQ had a pretty good, up until today. Although I think NASDAQ is, outperforming it today as well. But
NASDAQ 100 using the Qs.
Yeah, and then you think about regional banks. You think about, biotech's kind of stalled out.
So let me ask you this. You brought up the NASDAQ 100. So you got QQQ, NASDAQ 100, responding to the $635 level, right? Tried to record a new all-time high. Didn't quite get there. But when you compare QQQ versus S&P, we're not even close. We're recording a lower high. Like we've been in a downtrend of QQQ versus S&P since November 4th. Meanwhile, QQQ since November 4th has been a little higher. So we call that a divergence, a relative strength divergence.
Mm-hmm.
If QQQ has a pretty large negative divergence versus S&P, that could lead to a little bit more bearish stance. If the big cap tech, big cap growth, you want to look at MGK, mega cap growth, didn't match QQQ. So MGK is even more discounted versus the S&P since November 4th. I mean, you still need your star players to perform. I look at the Bucks and they're just so hard to watch. Giannis doesn't want to play for whatever reason. Way below felt 500. How many games away from elimination from the playoffs?
Really?
Yeah. If you're not going to have Giannis playing, if you're not going to have the Nasdaq 100 playing in this game, if you're not going to have Microsoft or Apple participating in this game, that's going to be really hard for the team overall to do well.
It is.
I mean, shoot, we don't even have Pat Mahomes in the playoffs in the Super Bowl. I really thought this was going to be Josh Allen's year. I thought Lamar Jackson.
I can't believe they fired
Pat Mahomes. Yeah, I can't believe that either.
They're so dumb. 8 straight years to the playoffs after 12-year absence.
People be fickle. And I get it. Like this was probably your shot with Pat Mahomes and Lamar Jackson out of the playoff.
Yeah, that's a good point.
This should have been Josh Allen's year. And here we
Script
are.
Writer is not meant to be.
No. Patriots back in. Crazy. I got respect for Drake May. I mean, good quarterback. Also married his high school sweetheart. I like that. Hope that continues. Yeah. But man, we gotta wait another week for that. And why isn't the Super Bowl on a Saturday?
Guess tradition.
Tradition.
As an American, what Sundays are for.
Or you have maybe Monday should be a day off.
Maybe getting lit during the Bad Bunny performance.
Bad Bunny. Yeah, I keep hearing about this Bad Bunny halftime performance. I don't even know who Bad Bunny is. My kids seem to know. Is he good? Should I be queuing up some Bad Bunny on the Spotify?
I don't know. You give it a whirl and then get back to me what you think.
Okay.
I think he sings in Spanish. So
that's not politically charged at all.
No, it's not.
Interesting. So
a bunch of American bigots could use some Spanish music.
Yeah, apparently that's the narrative too.
Yeah.
So we have weak February seasonality. We have Qs underperforming the S&P. XLE Energy and XLB Materials leading year to date. Meanwhile, there's still strength out of international. Even look at Spain, Austria.
I bet they hit Peru today, didn't they?
Oh, they had to. Peru's heavily mining.
Yeah, down 7.
These things happen.
Silver's down 28.
Oh, hey, double-edged sword.
It is.
Give and take away.
They'll fix it, right? I mean, they'll fix this.
No idea. Parabolic uptrends are the hardest. I do feel for those who might have gotten involved late that felt like they needed to get involved in silver now for the last 2 weeks.
Yeah, you did lose 2 weeks of gains today.
One day. Might be like that. What else, Ian? What else you want to cover for our listeners? And I do apologize. I realize it's, being a little bit more a somber of an episode, but I do think there's some damage done today if we don't recover by the end of the day. I think there's the old adage, strong opinions loosely held, or I would call them strong thesis loosely held. You have to have a thesis on market direction. You have to have a risk management protocol that says your thesis is either correct or questionable or incorrect. And it is one of the powers of technical analysis is it lets you know, when am I wrong? And maybe that's where we should pivot to is where is the herd wrong? Where is the bull market wrong? And I think you have to start with something like the S&P 500. If it can't hold, first of all, it's January 1st price level, which we call the zero line on our team. And then you have this point of control at 68.48. If we can't hold that, and if we can't hold the volume weighted average price from the all-time high, which is currently in that same level, 6,900, if we can't hold 6,900.
Yeah, 6,900. And I know we were down there last, we talked about that gap from January 20th, but we recovered in 2 days. We're getting It's getting a little lethargic. I mean, we got a little lethargic last July and August and kind of made it, we're able to make it out of that, but we'll see.
And then you do have a rising 200-day. 200 days at 64.28. You have these important lows in the S&P 500 near 65.50. If you're losing those, probably some corrective behavior. But, I mean, a correction to the 200-day is only 7% away. So are we correcting 7% into a 200-day in February? And the market moves higher after that? Also perfectly normal. Time will tell.
Yeah.
And maybe it's not 7,000 that it's struggling with. Maybe it's 6,999. The market bottomed during the great financial crisis at 666. Are we going to have a major top at 6,999? Could be.
NASDAQ at its 2.618 extension from the 2022 bear market.
Really?
Yeah, that's where this double top is coming in at.
Yeah, and if you're not going to have Microsoft and Apple and some of the bigger names participating, I'll say on the one side, you got semiconductors holding up well. On the flip side, some of these really big cap tech names like Microsoft and Apple.
Yeah, Apple's still below 260.
Still struggling.
5. What do you want to call it in there? 260. Yeah, we'll call it that.
And so I want to be careful because I'm not sitting here saying, the market's at a top. But I do think we get to say that, okay, evidence might be building for a February type normal year correction, somewhere in the -5 to -15% range. I don't think that's out of possibility, especially considering what sectors have led year to date and what sectors have not. I think you got to pay attention to that. I think you got to pay attention to some weakness out of discretionary versus staples, weakness out of financials. On the flip side, strength out of conductors, strength internationally. We shall see. I know we touched base on Bitcoin a little bit. What about crypto overall? Do you have any thoughts there? Things that you're seeing or looking at? You don't have to. Don't want to force you.
Yeah, let me wipe my tears away real quick. Yeah, crypto has been pretty rough. Crypto miners held up well. So clearly there's been some shift. I mean, those used to be very correlated. But I think Bitcoin peaked in August, down about 30%, probably now around 35% since August. Well, you had some of these minor ETFs that were up 40, 60, 90% in some cases. So I do find that interesting. I don't know what they're doing today. Probably getting hit a little bit. Yeah. But they look a lot better than crypto. Those in the past, I feel like those would have led. Bitcoin's down 4%. These mining stocks would be down 6 or 7. So maybe they've shifted away from mining Bitcoin. Of course, Michael Saylor's is MicroStrategy.
Yeah,
now it's just called Strategy.
It's called Strategy. The strategy looks and has been a dog since summer of last year. And that goes back to, we've talked about this on a couple episodes, the weakness since summer of last year out of some of these tech areas, specifically things like this, Bitcoin related or even software related. You look at the software, whether you're looking at HubSpot, Monday, Atlassian, CRM, these are all in Workday. These are all in 20+% year-to-date drawdowns. And some of these are 1 year drawdowns of north of 40%. So while on one hand you have quantum computing, Bitcoin mining, which I would argue could also be AI-based software holding up, some of these software names are just abysmal.
Indeed, they are.
We talked a little bit about precious metals, the move today, whether this is it or not. But you look at historical regarding precious metals, and they are they're high beta. Was that the top? Don't know. We won't know for a little while. Be interesting to see if there's some consolidation here before moving higher, or whether that was the top, and or even if we see something like the dollar strengthen, TBD. But I think back to, the last year's worth of information that we've had from a weight of evidence perspective, this is about as dicey of a market situation as we've had for a while. And you couldn't be surprised by weaker equities in February, both from a seasonal perspective and some of the things we just highlighted previously on this episode, just where strength is and where it's not. And who knows, maybe we're here a week from now recording another episode and these problems have resolved themselves. S&P's finally cleared 6,999 or 7,000. Time will tell. And that's the hardest part, is there's no guarantees. I can't sit here and say, yep, market's going down. Yep, market's going up. I wish I could, but I'm pretty sure if I had that ability and was accurate about it, probably not recording a podcast. Not sure.
Yeah.
Anything else you want to cover before we wrap this one up? No?
I do not.
All right. This is where I'll highlight the support of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Ian, thanks for doing this episode with me. Maybe this is a shot across the bow for metals and mining, for equities overall. As always, we're Bayesian, right? We have to wait for the next information to come in, the next stats or data to come in for inference. But right now, I think it's safe to say that bull market's intact. However, there are definitely some warning signs attributed towards today and this week. Time will tell. We appreciate everybody listening to this podcast. We ask you to give us a high ranking on your platform of choice and share it with your friends and family. That's a compliment to us. Thanks for listening.
Have a great weekend, everyone.